Well, good morning. Today is August 13th, 2026, and I am looking at the Artificial Superintelligence Alliance chart, ticker symbol FET. On this particular chart, which is on the Binance exchange, it's known as fetch.ai as the ticker symbol. So hopefully that hasn't confused anybody, but this is a coin trying to make AI agents uh, an everyday occurrence. So, with that being said, I am an amateur trader and investor. I have a day job that it does not involve finance. Therefore, I probably do not have the nuance of a professional trader. However, I do enjoy looking at charts because I'm a very boring person. And if this channel helps you make a decision about a particular asset or do some more research on it or get a second opinion, that's great. I have nothing to sell. I have no signal group, product, or anything like that. So let's just go over it and take a look at it and see what I think I'm seeing. And hopefully this helps you out. So, artificial superintelligence. Very interesting coin. As you can tell, uh, uh, well, you may not be able to tell, but let's just talk about it. So, I am looking at the 3 month chart, and what I am seeing is a series of higher highs and lower highs. So, as you can see back here in April of 2020, we came to this low, then we bumped up and we struggled a little bit at this top, but then we came down and we had a higher low. So this was the low of October 2022. Then we went up to the top, and now we're in I guess you could call the bear. People would call this a bear market because we're measuring it in days. However, I'm looking at the 3 month chart, which means each candle represents 3 months, and we're starting to get signs that we may be at the bottom of this particular, what I'd like to call, pause. So in trading, there is this idea of 3 to 5 waves, and this is the longest chart I could find with historical data for Fetch, but this is a centralized chart. Fetch could have been trading before it came on a centralized exchange, so I can't see this left side. So I only have this this to go on, and from what I'm seeing is I'm just seeing a structure of higher highs and higher lows. Now, the question is there more downside for Fetch? Well, we'll talk about that in a minute. But if this truly is the bottom of what I would call this pause, that means we're going to go back up. The only thing I don't know for sure is what did we have a was this, for example, uh was this did it go up like this, or did it start from here? Like maybe it was up here and kind of like a SpaceX situation where they valued the price at a buck 26 or something and it came down. That I don't know. So keep that in mind. We don't know this left hand side. So all we can do is go off this side. And so we're going to make inferences based on this side. It's incomplete for us, but it's what we've got. Okay, so looking at the 3 month chart, we appear to be in a very macro long term uh, trending situation. Okay, we've had two trends up where we made a point, a higher low, and a higher high. So that's what we like to see in when looking for charting. We like to see things that are have the example of going up. So let's go down the time frame and start looking at some things. So let's go to the monthly chart, and I'm going to just explode this here, and I am going to put on the 20, and I'm going to put up the 200. And as you can tell, we don't have any information on the 200, so I'll take that out. And let's see if we got the 50. We got the 50. So if you look at where we're at right now, the 20 has crossed the 50, and the 50 is kind of flat at the moment. Um, and so, with this 20 moving average pointed down, uh, that would be bad. Okay. However, if you bring up the 8 on this particular chart, what you see is the 8, the fastest moving average. Price has gone up above it, once, but it's starting to curve. And so if it continues to curve and kind of goes up, then that means that's going to change the trajectory of these moving averages. So what we have to see in the upcoming month or two is, does this 8 continue to curve? Is this the stop? Okay. Now, one thing you can tell is in October of 2025, we had a real nasty candle, big drop. It wicked down to this area. And since then, we have not gotten lower this candle, even including this wick, but we've been trading inside this particular wick. And you could call this inside bar trading. Usually you want to actually be inside the bar, not just the wick. But right now we haven't gotten below this point here, which came to 11 cents. So we've been trading above 11 cents, and we've been kind of doing this sideways action trading. So this is where the first sign we're looking for, we've got the curving 8. Does the 8 continue to curve because price stays stuck in this range? And if it does, then that means that we may see a start of a price, it'll have a few other bars here and then go up. So we're in a situation similar to this one where it ranged for, if you look at it from a monthly perspective, let's say 1, 2, 3, 4, 5. I'm even going to say 6 months. This is really the breakout bar. So we've been ranging for a while. We're at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And so this is definitely the longest range we've seen so far on this particular coin. But you could also make an argument that this was ranging too, which was 1, 2, 3, 4, 5, 6, 7 months. So, and if you take the 20 out here and you look at the 8, you can kind of see that it was, it had a little bit of a drop down, but it went back up. We'll have to see. This is just, an observation. I don't know, one of the things that is probably keeping this coin ranging more than usual. It could be that there are people trying to get into this coin. We'll take a look at that here in a second. But it could also be because of Bitcoin, because Bitcoin hasn't made a move yet, and it could be tying itself closer to Bitcoin. So this is the monthly. So let's go down to weekly. And what we see is back here, let's take out the 8, and we got the 50 up. So let's go back to the 20. The 20 crossed the 50 back in October of 2024. So each candle is representing a week worth of movement. And we just see that, it had a little bit move up. But one of the things that's happening is the 20 and the 50 are pretty close to each other on the weekly. And one of the signs you typically are going to want to look for to see if a bull market is starting is you are going to want to see the 20 cross the 50. And with these two moving averages being together, even though they're still pointed downward, that could be something that happens in the near future. We'll have to see. And if it were to happen, when would it happen? I would say later in the year. Uh, maybe early, maybe late 2026, early 2027. It's hard to tell. It just depends on how drastic the move comes. But as you can see, from a weekly perspective, the trend has not been very strong. We had from a market structure area, we have made, we had a low here, we went high, but we didn't make a higher high. But this has just been kind of like a slow trend. And we're now starting with these candles, and again, this candle hasn't finished. This is the weekly candle here. It's what we call an indecision candle, and it could continue to go down. So we've made a lower low, but we haven't made a lower low than this 11 cents. So we have to see, even though we're in a lower low situation, uh, if uh, if for some reason FET starts going up again, this just is another sign of ranging. And even if it gets lower to like say here and then goes up, it's just ranging. That's pretty much all it is ranging. Now, if we bring up the 200, you can see from a perspective, uh, we had the death cross back in December 2025, and the 200 moving average is flat. So if we once we start a move, this 200 moving average is going to be a big source of resistance. So let's not worry about the future right now. First, we have to change the trend. Okay, so now we're going to drop down to the daily. Okay, and from a moving average perspective, they're very clumped together. And if I bring up the 8, as you can see, what's happening is price is starting to disrespect the moving averages. And so, in my mind, based on the moving averages, they are still pointing down. What does this mean? It means that fetch could go down lower, but as you can tell, the trend is pretty weak. And what you're seeing is that with these moving averages clumping together, here at the top, you had a lot of crisscrossing and then downward action. And you kind of had this situation where price got above the uh, the 20, and now we're kind of clumped together. And if we throw in the 8 here in this mix, I mean, you can just tell it just gets messy and unrecognizable. That is actually a good sign, because what that means is we have switched from down to side. And typically what you want to see, that is one way a bull market starts. Is you have a V shaped, okay? And usually those happen because the price drops rapidly and it gets really far away from the moving averages. The other way that a recovery can start is by just ranging. And that's what I think we're doing here is we're ranging. And so I'm going to take these moving averages and I'm going to talk. I accidentally brought this up because I drew that line. I'm going to take all these moving averages off here and let's talk about why I think this is the range. And the reason why we're going to do this, we're going to go back to the monthly. Okay, let me close this here. All right. So what I'm trying to do is to guess where the range is. And at the moment, we don't really know the bottom range. It could very well just drop a little bit more, but it has a long way to go to not make a higher low. Okay. But where we are right now is we're guessing where the possible range is. So we had this really bad monthly candle where it dropped from 60 cents to 11 cents. And since then, we've been pretty much trading within this candle. And what I try to do is I try to look for at the bodies of the price action and ignore the wicks. And so what I'm seeing is if I were to explode this, and I guess I'll go ahead and do that, is to me, I'm drawing the top line at where these two wicks kind of are. And this candle has not formed yet. And so we'll have to see how it looks like in 18 days. But really, I will probably eventually drop the line of this candle to wherever the body ends up. And so if the body ends up here, then that's where I'm going to drop it. If it ends up here, that's where I'm going to drop it. And so this is a guess of the range. And these wicks, I'm just ignoring because that's just traders being traders. They put in longs around this area and hope for the best. They put shorts up this area and bring it down. So I do expect us to have some price action below here, and I expect us to have some price action below top on top here. And what this is when institutions and wells need liquidity, they can see stop losses, they can see where people have leveraged and where they are going to be in trouble if the price goes there, and they will sweep those, and that way they have less slippage on their particular transaction because they are putting in a lot of money, huge amounts of money that you know we can't even come close to. If they were to put that money all in at once, what happens is they get slippage because the price rises really quickly, and and essentially they were trying to buy at you know 13 cents, but all of a sudden now it's 15 cents, and so from that 15 to 17 is called slippage. And so what they do is if they can wipe out uh, longs and stop losses, then what that means is that there's less slippage to them, and they can sneak in more position buying in this area. So I do expect us to make this particular range line to come lower. So keep that in mind as you are looking in the long term for fetch. Now, if we go to, I'm trying to gauge whether we're at the bottom or not. So I'm looking at the monthly chart, and as you can see, usually with the monthly chart, this one actually happened to get below the 30, which is interesting. But for most assets, they typically they typically uh they typically don't get below the 30. And this is another example of one where we're at different times, like when you look at this bull run here, you notice that we never got below 30. We were here. Okay. And we were below 30 as soon as it started recording, which was about here, about September 2019, but it actually started on the exchange in February 2019. And it just simply said, yes, we're at the bottom. Okay. And right now we are below this trend line. And what this trend line is it's just very simply, I'm trying to gauge where the bull run started. So just to get an idea of if this trend line is crossed, we may possibly be in a bull. Okay. And one thing I'm seeing from an overbought, oversold perspective is we are in an oversold perspective. Okay. And that doesn't mean that you can't have some more downside. Like I mentioned before, you may, but there's not much more down to go if this truly is the downside of fetch. Now, it could be that it could collapse and make a new all-time low by going down there, but right now it just seems like, the selling trend has weakened drastically, and we are and I'm on the 2 week chart. Sorry, I thought I was on the monthly. uh we are on the 2 week chart. If I look at the monthly, it's the same thing, as you can tell. So sorry about that. uh but we are definitely in oversold territory. The buying and selling is definitely reduced on the monthly. And the stochastic RSI, we tried to get across that 20, but it was filled and we went down. And so we haven't had a monthly stochastic RSI cross since January of 2023. Okay. And so we're waiting for a monthly stochastic RSI cross essentially. And right now it's pointing down, so it doesn't look like it's going to happen anytime soon. We are at the bottom of the channel of overbought, oversold based on the money flow index. So there is some buying, but it's just, when you're in this ranging area, it's not uncommon to see this where you have some, you know, you notice how it comes to the top here, and then boom, all of a sudden, capitulation starts to get in. There's less buying, less selling. And if we look at the monthly perspective of the ADX, it says we're still trending. So this is another sign we may have some downside. We're at 22. To be considered trending, you have to be 20 and above. And so we're at 22. And the selling and the buying are pretty close together, but selling is definitely on top. We would have confirmation from a monthly perspective that we're in a range if we get below 20. And right now we are at 22. Okay. So with that being said, how do you trade this? Uh well, that's a good question. Uh if you believe and you really believe in this coin and you really like it, uh I would consider trading in this area right here. And you could do this with buy limits. I recommend a DCA approach. Don't throw all your money in it into fetch right now, but try to catch some buy limits down here, some down here, and maybe put a little bit here. And even though you know it may go a little bit lower, what you're doing is you're just starting for your position. And as the next couple months happen, what we really want to see is we don't want to see Fetch have a what I would call a I guess the best way to put it would be another wave. Okay? You don't want to see that. What you want to do is you want to see the price meander around this area starting from 11 cents. So what you want to see is around here, if it drops to like say 10 cents, that's not too bad. You're still ranging. It's just liquidity hunting, and that's what you should expect. So that's pretty much all I have to say about Fetch today. I don't know its future prospects, but one of the things, like I mentioned back here, if I go to like the 6 month chart and I unexplode this and I push into it, one of the things I like is I like this formation of higher highs and higher lows. And so what I'm hoping for is from a long-term perspective is are we going to come up here and then have a higher high? So it came to $3.48 at the high of 2024. Since we're in 2026, it's been 2 years where it's been going down. Could we expect a higher high above the 3.34, 3.8 cycle? We'll have to see. That's what we're hoping for as traders. So um, the shorts. So to sum it all up, Fetch looks like it's pausing. In other words, the trend is weakening, and we have a possible low of this cycle forming, and we in the short term it's looking like we're ranging, but long term it appears that we may have a low forming. And so what we want to see is this particular candle from a 6 month perspective is 4 months, and what we have to see is what does this candle look like in 4 months. And if you want to get a preview of it, you can look at the 3 month chart. And this candle is going to be ending in 1 month. So what happens with this candle? I mean, does it get lower than this particular point? If it doesn't, and it starts kind of making its way up here because it's ranging, then we could be in the start of the price going back up. But for these next few months, it's going to look like it's ranging. So, with that being said, that's all I have for today. I We are in the worst time of a trading market. Uh, you know, the future looks grim if you think about it from a financial standpoint, but this is just a cycle, and the way you make money is you've got to be able to force yourself to say, "Hey, this thing is at this thing's on sale. I need to buy this." And uh, even though there's a chance that it may go down, uh, just try to find something that you like the fundamentals on, something that you know a little bit about, and and as you see this investment here, you know take these long term looks of it and look at it in the short term, and at some point you just have to sit down and make a decision, and you have to put your money in when it's down, and you shouldn't use money that you have to live off. This could be something that takes 2 years to play out, and uh, it you know you're not going to be accessing them for quite a while. So keep that in mind as you start trading out there. May God bless you and your family, and have a great day.